this video today, we're going to talk about traditional lenders like big banks versus alternative lenders. Here on this channel, we talk about how to leverage credit, aka other people's money, to build wealth and become financially free like me. Disclaimer, this video is for entertainment purposes only, and you should do your own research. This video should not be taken as financial advice, as it is for entertainment purposes only. And so most people don't even know what is the difference between these two. So a traditional bank would be a Wells Fargo, a Bank of America, Chase Bank, and many other banks that are big banks. They have a big brand, a big name, and they're widely accepted across the United States. An alternative lender, or what is called a subprime lender, is a lender who is like a Kabbage. Kabbage is an alternative lender. So the way that these two lenders work is very, very, very different. And for you as a business owner, this is really important because that is how you figure out how and where you can get money, right? So if this is something that you're interested in hearing, please, please, please be sure to like, comment, and share. Hit that notification bell, and let's get right into it. So just a little bit about myself. I quit my job in the pandemic, my corporate job in the pandemic, and I started a brand new business. In less than 6 months in that business, I got up to over actually $100,000 in business credit on a brand new business that was less than 6 months old at 0% interest. So I want to show you guys how you can do the same thing or even do better. So straight to the topic. We're getting into it, really getting into it now. Traditional banks versus alternative lenders. So the things that a traditional bank will want to see from a business versus what an alternative lender would want to see from a business. So we'll start off with the traditional bank first, talk about the pros, the cons, and everything in between. Then we'll get into the alternative lenders. So first and foremost, a traditional lender is going to want to see that a business has been established for at least 2 years. Again, at least 2 years that you have been legally established with documents to support that. So they want to see that to be sure you're not risky. Things that you would need to provide in order to get approved for that loan or the line of credit. One would be a pretty good credit score. So usually 720 and above. And as the economy tightens up and gets stricter, it may get even harder. So you definitely want to work on that personal credit. So they want to see decent to good personal credit. Number two, they want to see that you have tax returns. Tax returns for 2 years. That's really important for them. They want to see that you're not just making up numbers, that you're a verifiable business, and that you have the ability to pay them back. Also, another thing that they may request is profit and loss statements, a balance sheet, sometimes even your revenue. That's really important for big banks. They really want to be sure that you are who you say you are, and it reduces their risk in lending to you. So again, they typically will do that for loans and lines of credit. Now there are some exceptions to that rule, which I can definitely make another video about if you guys are interested in that. So please comment down below if you would like to see how you can get around being in business for 2 years and get a loan or line of credit from a big bank. Now, from a big bank, you can get a business credit card. They're willing to give you a business credit card without being in business for 2 years. But let me tell you, if you don't use the proper techniques, they're going to lowball you and they're going to give you terrible terms. So that would be the difference between getting approved for a $3,000 credit card and a $30,000 credit card. If you don't use the proper techniques and build the relationship with the bank, they're going to offer you the $3,000 credit card and they're going to try to hold you there. So you don't want to make that mistake. And I can create another video of commonly made mistakes for small business owners, whether you're new or whether you are experienced. Tell me if you all want to see that down below. So yes, be very careful and cautious with the big banks. So 2 years tax returns and a profit and loss statement. They want to sometimes see a balance sheet. They sometimes want to see sales and revenue. They want to see a lot about who you are fundamentally with your numbers to get approved for a loan or a line of credit. Now, on the flip side, alternative lenders, they are a little bit different. A lot of them are willing to work with small businesses who are newer, and they have a little bit of different terms, but they're willing to work with you. So one thing that they typically require is that you make $8,000 to $10,000 in sales revenue for 6 months straight. That is one of the things that usually gets you approved for a loan or a line of credit with a alternative lender. Number two, they typically want to see that you have been in business at least 6 months. A lot of them say 6 months, some say a year, but usually the 6 month mark is the minimum. Number three, they are also willing to work with you on how they approve you. So say, for example, you don't have tax returns because you're a business that's only been around for 6 months. They'll be willing to use your revenue statements, your income statements, your accounts receivable. So what's accounts receivable? It could be money that you have sitting out there in the world that your customers have not actually paid you yet, but you have an invoice to support that this is money that you're expecting. So there are loans and lines of credit that are based on accounts receivable. Also, with alternative lenders, they will be willing to do equipment loans and collateralized lending. So let's say you have a vehicle, or let's say that you have a work truck or a HVAC system, something that if you don't pay, they can come and take it from you. Alternative lenders are usually willing to work with you in that way. Now, the cons of these two different lending institutions. For big banks, again, they have these requirements of tax returns, and for alternative lending, they want to see your sales revenue. Now, another difference between these two are with the bigger banks, they give you better interest rates. So one of the things that sets them apart is a big bank may give you a loan for 6, 8, 4%. Whereas an alternative lender will give you a loan for 10, 15, 18%, which is two totally different interest rates. And as you know, the higher the interest rate, the higher the money you have to pay back. So depending on what you need this money for is whether you should decide if waiting to go to a big bank or using an alternative lender is best for you. Now, if you guys would like to see a video with me giving you some options for alternative lenders as well as big banks, or which ones are the best, which ones have the best interest rates, please comment down below if that's something that you like to see. Again, here on my channel, we are here to use other people's money to get you financially free and build wealth. So thank you for watching, guys. Like, comment, share, and subscribe. Hit that notification bell. Let me know what you want to see in the next video, and I'll see you in the next one. Thank you for watching.